The start of FY24 has brought a lot of regulatory changes that will impact your investments. From mutual funds to equity markets, let's see what all will change for investors in FY24. Number 1 is STT hike. STT or Securities Transaction Tax was increased by 25% on the sale of futures and options contracts by the Union Government. STT on options have been increased to 0.0625% from 0.05% and on futures contracts to 0.0125% from 0.01%. STT is a financial transaction tax payable by the investor on every purchase or sale of securities that are listed on the Indian stock exchanges. Number 2 is debt mutual funds tax. LTCG benefits have been removed from the debt mutual funds. This amendment, a part of the Finance Bill 2023, was given a go-ahead in the Lok Sabha recently. Under the new rules, investment in debt mutual funds that are bought on or after April 1 will be taxed as short-term capital gains at applicable tax rates. Existing LTCG benefits will continue for investments made on or before March 31, 2023. Capital gains from debt funds, international funds and gold ETFs, irrespective of their holding period, will be taxed at an individual's relevant applicable tax rate. Debt mutual funds held for more than 3 years will no longer enjoy indexation benefits. Indexation takes into account the inflation during the holding period of a mutual fund unit and increases the purchase price of the asset, and this reduces the tax. Number 3 is new income tax slabs. This year's union budget included many income tax regime related changes. The tax slabs falling under the new income tax regime have been reduced to 5 from 6 earlier. The new slabs will be applicable to those taxpayers who opt for the new tax regime in FY24. Under the new income tax regime, the tax rebate has been increased from 5 lakh to 7 lakh. Along with that, basic exemption limit under the new tax regime has been revised from 2.5 lakhs to 3 lakh rupees. Number 4 and the last one is small savings rate hike. The government has raised interest rates on most small savings schemes by up to 70 basis points for the first quarter of FY24. For NSC or National Savings Certificate, the interest rate is set at 7.7% from 7% earlier. For Sukanya Samriddhi, rates have been increased to 8% from 7.6%. The interest rate on senior citizen savings schemes and Kisan Vikas Patra are now hiked to 8.2% and 7.5% respectively. So this was all about the major changes that are going to affect the investors in the financial year 2024. See you next time. Till then, stay tuned to ET Markets for everything related to stock market and more.